Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute for September 15th, 2013. Markets rose again last week in a completion of the rebound move from the August bottom, helped along by the deferral of military action in Syria and economic data that was soft enough to revive hopes for little or no movement by the Federal Reserve when its Monetary Policy Committee meets this week. Stocks look likely to rally right into the meeting, helped along by the surprise withdrawal of Larry Summers' candidacy to be Ben Bernanke's successor as chairman of the Fed come January. Many had had a kind of inherited view of Summers as being too much in bed with Wall Street, but the truth of the matter is that he was one of the street's least favored candidates, definitely the least favorite amongst the top contenders. The immediate global rally in equities is evidence enough of that, although you can expect it will be ignored by his critics. It should be an exciting week. There will be more news on the housing sector before the Fed meeting, in particular housing starts, which might give us a clue as to how big of an effect the recent backup in interest rates has been having. It certainly has put a damper on refinancing activity. But the home builders have been talking for months about not ramping up sales too quickly and focusing on profits over volume. The last new home sales report did show a big drop in sales at the low end of the price range, so maybe some moderation in sales is to be expected. Now, Fed meetings are always a big deal on Wall Street, but this one is one of the most widely anticipated in a very long time. Ever since Chairman Bernanke raised the possibility of the taper back in May, cutting back on the bank's bond purchases, the prevailing opinion has been that the September meeting would be the occasion for the first step. It comes with a press conference, for one thing, giving Bernanke a chance to explain or misexplain things at length, and for another, when he first raised the subject, he talked about maybe ending purchases entirely by the middle of next year. So if the Fed wants to do it smoothly, September would seem like the logical starting point, though there is a sizable minority still hoping for December. I certainly have no prediction to make on what Bernanke will do. My track record with him has not been good, and the chairman has often zigged when I thought he should have zagged. Although I'm not one of the group that thinks that the current policy is going to end the world as we know it and leave our grandchildren in poverty, I wasn't in favor of it either. The evidence a year later seems to suggest that the last round has had little or no effect on the economy, though it certainly had a very big effect on stock prices. Maybe too big, as Bernanke first raised the subject of the taper back when equities started acting crazy in May. And my experience is that when markets are as obsessed with Fed policy as they've been over the last year, it's followed by a difficult period for stocks. But no one knows exactly when that period begins, including me, and so traders will keep riding the Fed surfboard for as long as they can. The majority opinion seems to be that some Fed action is so widely expected this week that it won't be a big deal. That may happen, and stocks could indeed carry on to all-time highs. But I'm not making any big bets ahead of this one. I'm Kevin Flynn. Thanks for listening to another edition of Avalon's Market Minute.